Hey everybody, Tish asked me to put together a little presentation on introductory finance, sort of a finance 101. And I kind of wondered what was the best way to do this. And I wondered if I could put together a video so that I'm not, trying to remember what I got to talk about or Anyway, I did put together a little video and I called it cARTie, Fun with Finance, which I thought was fun. So let's have a look. And again, you guys are a pretty diverse audience. And this is very high level view of finance and, kind of an introductory course in finance. And I'm going to squeeze it into 5 or 10 minutes or something. So let's have a look. So one of the most important things that we'll look at, and we look at this in cARTie, we'll look at this in QuickBooks for cARTie, is the balance sheet of the firm. And basically we have assets on the left and liabilities and equity on the right. So we have current assets, fixed assets. So the idea is that the assets must equal the liabilities, debt, and equity. And we'll look more at this, and we will look at cARTies as well. So we have the capital budgeting decision is the decision of what sort of investments should the firm make. Long term, in cARTie's situation, that would be, should we buy another bus? Should we have a lease a property, those kinds of things. And yeah. So, and then of course, how do we raise money, right? So long-term debt would be a corporate company that issues bonds or issues equity, shareholder equity. So this is normally in the corporate world how firms raise money. And we're not in that position. We're in the position of really seeking donations, But always in the back of my mind is the direction that cARTie wants to go. And in my opinion, my humble opinion, cARTie would eventually want to be self-sustaining, So we'll talk a little bit about that more later. But first, this is just an overview of the financial picture. So, then we have short-term asset management, and this is the difference in your current assets and your current liabilities. So your current assets is, cash in the bank, and your current liabilities are your accounts payable, what you currently have that you owe. So, and the difference there is, of course, your net working capital, which is capital that you can use, money that you can use to put to work for you. And in cARTie's example, that may be, let's use some of that to have books made or buy supplies for the cARTie bus, etc., etc. So the financial manager's job, which is, I guess, what I do, is looking at the different projects that we do and trying to make smart financing decisions. So we have been in an environment where the money that we have raised, and you guys do a terrific job of raising money, but since cARTie's inception, their interest rates have been very low, and that's likely to change soon with the state of the economy and inflation. And we may want to start thinking about, well, what can we do to make our money work better for us, which is, the responsible thing to do. So the goal, and this is from a corporate perspective, the goal of financial management is maximize profits, minimize costs, market share, all those things. But the idea is to maximize shareholder wealth. So, and this is not applicable to cARTie, but it is the standard corporate finance model. And it's analogous to what we do at cARTie because shareholder wealth is all the people that have invested in cARTie and want to see it be successful. So the financial management role for cARTie is to try to make that happen. So we've been talking about this balance sheet, which is an accountant's snapshot of the accounting value at a specific point in time. And then we have this identity, which must always hold assets are equal to the liabilities plus stockholders' equity. And we'll see that when we look at cARTie. The other important form or statement that finance is concerned about is the income statement. So this measures the financial performance. And the accounting definition of income is revenue less expenses, right? So we'll just have a quick look at this. I think there's maybe 18 slides. So, and this is that same U.S. composite corporation that we looked at a little bit earlier. And this just starts to talk about the income statement. So it's the operations section of the income statement where they have operating revenues, cost of goods sold, et cetera, other income, net income, and then how much are they keeping and how much are they paying out to their investors. So we're not obviously paying any dividends, but I think it's important that we have some money that we keep so as to make cARTie self-sufficient, through the years. So it's sort of financed in perpetuity. This would be the non-operating section of an income statement. So financing cost, interest, et cetera, right? So these are all expenses associated with not operating expenses. And then a separate section reports taxes. And of course, we're not worried about that with cARTie, but this is, again, Finance 101, a really high overview, Finance 101. Net income is the bottom line on this. So we have operating revenues, cost of goods sold, depreciation, operating income, et cetera, and we get to the bottom line, okay? So then the other thing that's worth talking about is net working capital, which is the difference between current assets and current liabilities. So this slide just says the cash flow from a firm. And just like the balance sheet identity must hold, also this cash flow identity must hold. The cash flow from your assets must be equal to the cash flow from the creditors, your liabilities, which is CFB here, right? So current liabilities, and the cash flow to stockholders. So those things, the identity must hold on the balance sheet and the identity must hold in the cash flows. Now I want to take a look at cARTie. Okay, so this is QuickBooks, and I just want to show you the reports that we just spoke about. So we have, this is business overview, and Tish does all of the entry into QuickBooks. Thankfully. Thank you, Tish. You do a great job. And let's have a look at reports. So standard reports is fine. Custom reports, and we have a circle. There we go. So accounts receivable, it's not such a big deal, but statement of financial position, we're going to have a look at that. And this is often a report that we may show you at a board meeting, but it's essentially the balance sheet, right? So we have assets, and then we have liabilities and equity, right? So, and as I described in the previous section of this, the assets would be on the left, and the liabilities and equity are on the right, and they must equal. And this is total equity that we I just mentioned to you. Retained earnings is the idea that we should hold some money back for cARTie to become sustainable through the future. So this report I wanted to show you, and We go back to report list here. We'll have a look at the income statement. So, and cARTie calls that a statement of activity, and this is nothing more than an income statement. You see revenue, you see gross, total revenue, gross profit, right? Gross as in before expenses. Then we have expenses, fees, advertising, marketing, payroll, and travel. So we had an artist come down from Boston to do that live feed, which was great, and then net revenue. Okay, so those are the two reports I wanted to show you of cARTie in QuickBooks. So that's it, man. Thank you, everybody. I hope that was helpful.